What's up, traders? Zach here from the Trading Network. I hope you guys are doing well and that you've had a nice weekend. I am back with another weekly review video. We are going to talk about my stats for the past week, and then we will dive into a couple trades that I want to discuss with you guys more specifically and show you some good takeaways that I had that I will be able to use and improve on moving forward. Another thing that we are going to be discussing and something that I will be doing in most of these videos is essentially having a theme of the day, or a theme of the video, if you will. And the theme in this video is going to be a massive cliche that you guys are well familiar with, I'm sure. And that is that less is more. When it comes to trading, that is especially true. So you can see that in my trades this week, generally speaking, I took a pretty low amount of trades. I'll go back here and I'll show you Monday the 31st. So Monday the 31st was where I took the most trades, right? I took 18 trades or had 18 executions. Now that is on the higher side for me. You can see that as we move further into the week, on Tuesday, I took 5 trades, locked in a little under 4K. On Wednesday, I took 3 trades, locked in 5.3K. On Thursday, again, a higher trading execution day. Spent too much on commissions that day, but was able to lock in 6.2K still. And on Friday, the 4th, I was able to lock in 4.3K with 8 trades. Now, the reason that I want to talk about this theme with you guys is because it's something that I notice, especially with newer traders that I'm working with in one-on-one mentorship or traders that join the TTN private community. Most traders, they understand the technicals, they understand the setups, but they are nowhere near picky enough. And I'm sure you guys have heard this. If you've been trading a while, you understand how important it truly is to be picky with our setups and not settle, right? We don't want to settle in most aspects in life, especially when we are putting money on the line and we are looking for the highest probability setups to make us money, right? So what I see in most traders, especially when they are not yet consistently profitable, is that they are over trading and that they are truly not patient enough for their high probability setups. What I mean by this is that, let's say, for example, that you have, 5 technical checkboxes, right? If you have 5 out of 5 boxes checked, that is an A+ setup. If you have 4 out of 5, maybe that's an A setup. If you have 3 out of 5, that is, maybe a B setup that you might not even want to take. Most traders, from my experience, as they are developing and they are seeking consistent profitability, they are too quick to take trades that maybe have 3 boxes checked, right? They are not picky enough and they are not patient enough to wait until they have an extremely high probability setup that is likely to work in their favor 70, 80, even 90% of the time. Now, this can be detrimental over a large sample size of trades because if you are not picky enough, that is, first and foremost, a really easy way to start the tilt spiral. For example, most traders are very eager to hop in a trade as soon as the market opens. They do not have the patience. They do not have the ability to be calm and centered during that large spike of volatility upon New York Open at 9:30 a.m. Eastern. And a lot of people ruin their days before they even get started, within the first 5 or 10 minutes of the session. Now, one thing that is exceptionally important as you're growing in your trading journey is to really focus on checking your technical boxes and being as picky as possible. Because the more trades we are taking, of course, the more risk we are exposing into the market. If we are exposing risk into the market when we only have 3 boxes checked out of 5 or 6, then you're basically getting into a 50-50 coin flip trade as opposed to, a trade with a few more boxes checked that is much closer to a 70 or 80% probability that it's going to work in your favor. So with that said, if you guys only take one thing from this video, I want you to take away that patience truly equals profits. Again, I'm throwing cliches left and right in this video, but they're for good reason. These simple little sayings, if you truly abide by them, it is going to be the difference in most cases between you losing money on more of your trades than you make money, right? If you truly wait for your setups that have at least 5 or 6 boxes checked, yes, you're going to be taking less trades. And again, that's kind of the point, right? Less is more. 5 trades, 3 trades. I mean, look at these numbers. It is all about waiting for probability to be as much in your favor as possible and capitalizing on that as much as you can. In most cases, if you wait, you're going to be taking much less trades. You're going to be spending much less on commission. You are going to be winning much more than you are losing, and your winning trades are going to be much larger than your losing trades as well. That is a recipe, my friends, of consistent profitability. Now, what we are going to do is I'm going to just show you guys a couple of trades that I think were pretty darn close to A+ setups, at the very least an A setup, and something that you guys can use whether or not you're using my system, whether or not you're following the TTN strategies. You can use this formula, the checkbox formula, if you will, to create probability and understand that if you have 6 technical factors, right? Let's say you have momentum oscillators. Let's say you have volatility oscillators. Let's say you have trading with the trend. Let's say you have candlestick structure. Let's say you have major level, right? That's 6 things right there. If you have 6 out of 6 boxes checked, that's an A+ setup, or about as close as it gets, right? And that is basically what we have right here. So let's break it down. If you guys have watched my content before, you should be familiar with the opportunity zone. That is the trending strategy that we teach in our Fundamentals of Futures Trading course. It is essentially buying or selling the pullbacks into the opportunity zone, which is 2 moving averages that create a zone. You will notice that if we are in a trending market environment and price pulls away from the opportunity zone and you see a pullback into it, very often you will see excellent reaction from that opportunity zone, especially if you have other tools in confluence with that. So let us break down a little bit more slowly our checkboxes here. Okay, so we have 1, 2, 3, 4, 5. Do we have 6? We will find out. So our first checkbox is we are trading with the trend. Okay, that is 1. Our second checkbox is that we have momentum oscillator confluence. You can see the momentum oscillators are getting exhausted to the downside. They're curling and crossing to the upside as price is bouncing inside of the opportunity zone. That's 2. We have major levels. We have multiple major levels. 1 being the regular trading hours high from November 3rd. And we have the first upper deviation of VWAP. You can see VWAP itself is right here, and the first upper standard deviation is right here at 10,882. That's 3 boxes checked. Our 4th box checked is our proper candlestick structure. And this is actually the trigger. So you could do it in a few different ways. You could say that we have momentum oscillators getting crushed to the downside, and when the volatility oscillators are crushed to the downside. And when that is the case, that tells us that volatility is likely to expand, right? So if you guys have watched especially my most recent scalping videos, you will know when putting this information together, if volatility is likely to expand, if price is in an upwards directional move, bouncing around a support level, bouncing inside the opportunity zone, with momentum oscillators curling and crossing to the upside, with great candlestick structure, where do you guys think the probability is directionally? To the upside in this case, right? So again, we have our major levels. That's 1 checkbox. We have trading with the trend. That's 2 checkboxes. We have our momentum oscillators. That's 3 checkboxes. We have our volatility oscillators. That's 4 checkboxes. We have our candlestick structure, our local low. That is at least 5 checkboxes. And it could be considered that we have a little bit of a probe here, a little bit of a trend line, and that could be our 6th checkbox. So if we're being picky, maybe it's 5. If we're being, a little more lenient, and I do think that it is quite fair to say that is a nice little probe there as well, then, it could be 6 out of 6 checkboxes. This is either an A setup or an A+ setup, aka very high probability, right? So that is exactly why I hopped into this trade, and that is precisely what I am looking for and what I'm doing my very best to be patient for. And it's really all scenarios that I am trading in the zone where I'm in the flow of the market. This is how I'm thinking. I'm thinking, how many boxes do I have checked here? Am I trading with the wind at my back? Do I truly have edge on my side? Is this a 50-50 coin flip, or is this a 5 or 6 checkbox trade where it's 70, 80+% probability that it's going to work in my favor, right? This is how a professional trader can have a system for every single trade. This is how less can truly be more if you consistently wait for your highest probability setups, okay? So this right here, again, either an A or an A+ setup, you can see that we have a local low inside the op zone with multiple major levels in the area. We have confluence with our momentum oscillators. We have confluence with our volatility oscillators. And we could even say that we have a nice little probe there as well, right? So a lot of things in our favor. That is exactly what we want. That is what we need to have probability on our side when we take trades. And my friends, that is why less is more. That brings it full circle. And that is the theme of this video. We want to be picky. We do not want to settle for nonsense, low probability trades. Nonsense, low probability trades are not worth our time. They are not worth our money. And they are certainly not worth the negative emotions that come from the result of knowing that you just took a low probability trade impulsively for no reason other than greed and to feel the thrill of getting involved in the market. Do not take a trade unless you have your boxes checked. Do not take a trade just to feel something. If you want to feel something, go to the casino or go ride a roller coaster or something. You know, this is not the arena that you want to get yourself involved in just to feel an adrenaline rush. This is calculated. This is chess, my friends, not checkers, okay? So with that said, if you guys are finding value in this content, I would greatly appreciate it if you would like, subscribe, and click that bell notification to be notified every single time that we post videos here on the channel. If you would like to learn more about what we do here at the Trading Network and more about our private community, please check out our website, thetradingnetwork.io, where you can purchase access to the TTN Pro Trader Bundle, which includes lifetime Discord access, the Fundamentals of Futures Trading course, as well as our proprietary indicator package. You can purchase all of those standalone on our website as well, in addition to one-on-one mentorship with me. And if you guys have any questions, please reach out to us at info@thetradingnetwork.io. You can drop a comment down below, DM us on Instagram, Facebook, Discord, anywhere you can find us. We will help as soon as we possibly can. And I look forward to seeing you all in the next video. Much love.